So Centrifuge launched a tokenized version of the S&P 500 index fund on Coinbase's BASE network. Guys, the S&P 500 is basically the top 500 companies in the United States. And the only way to get access to it as of right now is to buy it on your brokerage, and you have to be a US citizen, right? Or at least have some kind of US domiciled fund. There's a high barrier to entry. And the cool thing about tokenization is that it takes that away. Now, there is some red tape around this that we're going to cover, but I'm going to give you guys the high level, and I'm going to talk about how I think this is going to benefit DeFi long term, and how if it was around before the last bear market hit, it wouldn't have been as bearish for sure. Okay. So just to give you the TLDR, it's called SPXA. It's on the BASE network. The fund allows round the clock 24/7 trading of the S&P 500 with transparent holdings, and is managed by Janice Henderson and Centrifuge's Anemone. Now, this Janice Henderson has like 500 million in AUM, so they're kind of teaming up. And if we scroll down here, this is the first tokenized index fund licensed by the Dow Jones indices. So when they say licensed, that means they gave it the approval. We all hear about stocks and stuff coming on chain, but if they don't give an approval, then you can't expect any institutional capital to play around with it, right? Now, what is Centrifuge? You're probably wondering, okay, what the heck is Centrifuge? What is that? So I made an in-depth fundamental analysis on Centrifuge like a year ago. I've known about this project for a couple years now. And basically what they do is they allow you to finance different assets and borrow against them, whether it be invoices, mainly illiquid assets, invoices, real estate, even loans, right? You can borrow money against loans. And if we look at this website here, it's called rwa.xyz. They are private credit, right? They're extending credit privately. You can see Centrifuge is just below Maple and a few of the other popular ones we know. They're above Goldfinch. Both of those we also made fundamental analysis videos on as well. So far, they've issued 609 million in loans. Right now, they have 69.5 million in active loans with an average APY of 8.7%. Nothing compared to what me and Basejunkie is getting in DeFi, but for people who aren't allowed in DeFi, institutions that aren't allowed in DeFi, they're licking their chops at yields like this. So if you come onto the Centrifuge website, you can see a few of the funds that they have on chain, right? And a few of the yields. So they have this treasury fund, where it's on-chain treasuries. They have this CLO, which is collateralized loan obligations, 5%. And then this is the fund for the S&P 500. Guys, I did mention that there was red tape on it. And the red tape is that you have to be a US accredited investor, which is basically, have a net worth of $1 million, or not including your primary residence, or make $200,000 a year for the past 2 years, $300K if you include your spouse. And the minimum investment here is $500K. Now, everyone's not going to be able to get into that. It's honestly easier to be able to buy it from like your normal brokerage, but this is the beginning stages. Whenever there's a new technology, a new offering, it's always expensive and kind of inconvenient at first. Like, think about how shitty the internet was when we were using it via dial-up. It was super slow, and it was more expensive than our current Wi-Fi bill. Eventually, regulation and things are going to shake out to where it's cheaper and easier to do things on chain versus the other. Now, how does this impact DeFi, right? Who cares, really? Like, who cares? So since it's on chain and it's tokenized, you're probably thinking, well, can I take the tokens and be able to like provide liquidity in DeFi? Like, imagine being able to provide liquidity for the S&P 500. Not quite yet. So technically, token standards do allow you to send assets peer-to-peer, but with most RWA tokens, like these issued by Centrifuge and Maple Finance and Ondo, they use something called whitelisting to basically, they use transfer restrictions on the assets that they're issuing. So basically how it works is you go to that website that I just showed you, where you buy the fund, you prove you're an accredited investor, they do KYC, and then after, you're able to buy a token that represents the actual S&P 500 shares that they hold, right? So they have transfer restrictions at the smart contract level, which means you can only transfer it to another wallet that's passed their compliance checks. So this prevents it from being freely traded like a normal DeFi token. Now, in regards to providing liquidity, in theory, if the protocol whitelists like if like let's say Uniswap or Aerodrome or even Aave whitelist, like they get some kind of whitelist spot to where they can use it on their platform, and then you can use SPXA as collateral. It could be used in lending markets. So like imagine, and this is what I said in the beginning, right? If this product was around in the capacity that I'm about to tell you guys right now, we wouldn't have had as steep of a bear market. There's always going to be bear market because it's fear and greed. But if you look at what happened with Celsius and BlockFi and Three Arrows Capital and Terra Luna, it caused a lot of forced selling, meaning people had to sell even though they want to and didn't want to. And the reason why is because the collateral was tied to what they're investing in. So like, for example, if I'm using Bitcoin or Ethereum as collateral and I'm using it to borrow stable coins and the price of Bitcoin drops, well, I just lost my collateral, and now the platform, when they liquidate me, they're going to have to sell that Bitcoin to get their profit and their fees, right? So when the price of Bitcoin dropped, 50, 60, 70%, the price of ETH dropped 50, 60, 70, 80, 90%, everyone's collateral's value went down and they had to sell, right? So imagine if US Treasuries are on chain, and for example, the S&P 500, you're able to deposit S&P 500 shares or US Treasury shares on Aave and use it as collateral. Now, if you're using it to borrow Bitcoin or stable coins and the price of Bitcoin drops, your collateral isn't going to be faulty because you're using S&P 500, which is something that even if a recession happened, that thing's dropping like 10%, right? Which isn't crazy. It's a huge capital outflow, but it's not that big in terms of percentage drops because institutions are holding it and they're not selling versus like how crypto is right now. So had that happen, it wouldn't have caused for selling. People wouldn't have gotten liquidated. The market wouldn't have tanked as much as it did. And that's the future where we're heading, where DeFi and TradFi are going to be, they're going to begin integrating, and you're going to be you're going to be able to use like different TradFi assets as collateral and eventually be able to provide liquidity with them in DeFi, right? So this is the long-term vision. But right now we still have a little ways to go. And I think that's pretty huge stuff. It's a good start.